Let's get across the market open now. Mark Gardner joining us from MPC Markets. Mark, happy Monday to you. So, the focus was on those talks between the US and China over the weekend. President Trump saying 80% tariffs on Chinese goods seems right. The Chinese saying sustainable development had been made between the two. Where does that leave us, do you think?
Yeah, look, it's still very much up in the air, but the fact that they've taken first steps, I think is a real positive. Up until last night, we really only had Trump commenting on it. Not even Besant really had commented too much on it. But the Chinese Commerce Minister saying basically that it was an important first step, and obviously that means that there's a deal to be done essentially. So the quicker the better, obviously, because we had, I think for the first time since the pandemic, on Friday, basically no ships have left China at all, which is, so now essentially over the last couple of weeks we've had less ships leave China, particularly to Western Coast ports in the US than during COVID. So they're going to need to hurry up because there's going to be empty shelves fairly soon for a lot of the retailers and possibly the supermarkets and things as well for essentials. So yeah, it'll be any progress is good progress at this stage, and I think we've seen futures start to head higher already. Gold started to take a little bit of a premium out this morning, down about 1 or 2%. Futures up nearly 1.5, and you've got your industrial metals like copper heading higher as well.
We'll get to copper in just a moment. Also interesting, had some more Fed commentary over the weekend. Thomas Barkin saying, look, he thinks the consumers there are tapped out. Further to your point about things are going to start disappearing from the shelves, he's saying he doesn't see that they can actually pass prices on because consumers aren't going to cop that.
No, when we've seen there's a real push, the old Afterpay, which is with Block, using that at supermarkets and things, because credit card debt at the moment and 90 days in arrears credit card debt for consumers is at all-time highs, and the consumer is pretty tapped out over there at the moment. They did a fair bit of panic buying leading in, so did the retailers, which is probably fudged the numbers a little bit over the last month or so. I think you'll see a very sharp reversal, but yeah, I sort of think that there's a lot to still play out. Trade deals are not easy, particularly ones that of the magnitude of the number 1 and 2 economy in the world. Particularly with leaders who are very proud, and there is an element of ego involved. So even a quick deal could be too late for the consumer, and those prices are going to have to be passed on. So, but I mean, we're already looking at trucking volumes going through the floor in the US as well, and most of the retailers hold about 60 days worth of inventory. They're getting towards 25 left basically. So it'd be interesting to see how it plays out over the next few weeks. But I'd be very cautious of this optimism, particularly at these price levels, because we're down 2% now in this entire move, and bear market rallies tend to be very sharp like this. When you have a sustainable bull market rally, it tends to grind higher over a longer period and be more sustainable. These very short, sharp rallies are very, very characteristic of a bear market.
So how cautious are you then, given that?
We're selling into this and going back to some cash. We'll probably start to buy back into the gold miners again around 3,100 in gold, or 3,100 to 3,000, and because I think overall, once we get through the tariffs, etc., I think the damage will be done to the consumer. I think there will be some form of tariffs, obviously, coming from China, whatever they are. That's going to be passed on the consumer, which is going to be inflationary, and we still haven't seen any of those Doge job cuts come through in any of the payrolls numbers either. So I think the economic numbers might start to turn a little bit. We've got CPI this Tuesday night or Wednesday night. I think they'll be very closely watched, given it's the first inflation number since April. But I would expect the inflation to come through next month rather than this month.
Now, Mark, you mentioned copper price on the rise. Now, for BHP, they have discovered they're sitting on a lot more copper in South America than they'd anticipated.
Yeah, Filo del Sol copper discovery. They bought from the London family. They've got a 50% stake there. It's supposedly 15 times more copper than they thought. It's in the Andes in Argentina, which I'd imagine's not much fun to get it out of there. So the cost of production is not going to be super low, including getting it to the ports. But that really does. It's obviously one of BHP's big focuses, and I think we're obviously sitting. You can look at the 5-year chart there. We are sitting at really nice lows at the moment. And I look with iron ore. Obviously, trade deals may give optimism around the Chinese economy. They are at least providing stimulus at the moment. But copper, particularly for the AI thematic, etc., I don't think anything's changed there. So we are back around about the 470 to 480 mark a pound there, and with the record highs around that 520. So I would expect it to keep going hunting to highs, but BHP being very strategic and thinking very long term, I think they're of the same opinion, obviously, with their moves in trying to get into more copper.
So, would you be looking to buy then at these levels?
Absolutely, yeah. We own BHP, and we're happy to top up. We're just sort of waiting for to see the uncertainty around the economy, because obviously it's a very cyclical name. But we've got our core position on here at the moment, and then we'll add with momentum as it'll probably be Q3, Q4 towards the end of the year. But I think things are looking very bright for BHP overall. They've got that potash coming on in 2026 as well, which will diversify them away even further from just being pretty much an iron ore producer. And obviously that rise in copper as well. So I think it'd be a pretty buoyant day for BHP today.
All right, and just more broadly, so expectations a higher beginning for the week overall. What are you looking for this week locally?
I think we'll dine out on the optimism. I think Trump at the moment knows that he needs to keep things positive and keep these trade deals going. So I think he'll be full of good news all this week, and I think we'll probably continue to grind higher. As I said, if the sorts of things we'd be looking to do, we'd be more selling into strength and returning to a little bit of cash, and we'll wait and see, because I don't think there's any shame in just being in a little bit of cash at this point, and maybe some gold, because obviously we had a ceasefire between Pakistan and India over the weekend, which I think was almost immediately breached. We've got progress on a couple of on the Ukraine and Middle East deals and things as well, and we've got trade wars going on. There's a lot of uncertainty out there, and if it starts to bleed through into the economic numbers, I think we'll start to worry about recession and start forgetting about those other things, because it'll be the first time in a while where we've had slowing growth, and couple that with inflation. Stagflation is what everyone is fearful for. It's horrible for stock markets. It's horrible for central banks. So because it means we can't move those rates lower to help